He's got more on what's moving this morning. Bob, take it away.
Good morning, David. So we're 3 days into a supposed recovery, and it looks like we're moving down again here, succumbing to gravity a little bit, as Tom McClellan said. I just want to show you a chart. If you have any doubts that inflation's not a worry for the markets, just remember how this whole thing started. On February 2nd, when we got better than expected jobs report and wage growth, best we've seen since 2009, we dropped 665 points in the Dow Jones Industrial Average. There's that first circle, and that's what started all of this. This was not a technical correction like some people say. I mean, it's true volatility exacerbated, certainly on Monday, the issues, but this was very fundamentally driven, the initial decline about concerns about inflation. Then this morning, when we had a CPI a bit higher than expected, even on the core, we dropped 400 points from the high to the low and recovering a little bit, but there's you get a very clear indication of what the market cares about right now. You could say it's a little bit of an overreaction, but we moved 1,000 points, 1,100 points almost on inflation concerns here. And you got to wonder what Jerome Powell is going to do at this point. Whether or not he'll be gradual in his rate hikes as Yellen, we don't know. And remember, they're talking about Loretta Mester for vice chair. I mean, she's a hawk, or perceived to be a hawk. Take a look at the sectors right now. 10-year moving up to the new highs. Generally, we're just seeing right across the board, yields are higher. Banks are doing a little bit better. In the middle part, industrials, materials, they're all down about 0.4, now 0.2%. Utilities are getting clobbered again with the yields up. We're down, what, 11%, 12% utilities so far this month. And energy is just in ugly shape. Remember, we were heading towards $70 on oil. We just dropped below $60 today. That's what a somewhat weakening picture for oil goes, and stabilized, a slightly up dollar will do. So take a look at the XLE. This is your energy ETF. Complete round trip here, up as oil went up a month ago, and as we've hit the top in oil, it's been straight down, and that's been a real drag on the S&P 500 recently. As for the where we're going today, we're of course rolling into a new VIX futures contract, and curiously the VIX is down. The cash VIX, you'll notice, down rather notably. That February expires, and if you look at that 19, now we're in a more normal curve here. So we've had this situation where we've had a dramatically elevated cash recently. The futures have been significantly lower. The front month now, the cash rather, is still a little bit higher, but getting a little bit more normal in the curve in terms of where we are with the front month contracts here. I just want to move on and just talk about the fundamentals, because we're 70% through the earnings season and the numbers are continuing to hold up. We are close to the best numbers that we've seen in earnings and revenues in 5 years. Not quite, but we're very close. Almost 15% earnings growth. Revenues up 8%. Given the key story, this is no longer a cost-cutting story. Revenues genuinely are going. What we really care about is the 2018 earnings trends, and that also is holding up very well. Estimates are rising for all 4 quarters, and this is very unusual because normally you get through the first quarter, middle, and the analysts, the numbers start coming down. They start cutting the numbers because they're too optimistic. That's not happening. We have a new trend. So expectations for earnings are improving, and we've had a bit of a correction. Stock prices are lower. That's very bullish for the stock market. The old trend, remember they always cut the numbers. The expectations were weaker and stock prices were higher. That was a problem. Everybody said stock market's too expensive. Well, we have a new trend now, and overall, that's very hopeful. We have no idea where this is going to bottom out, but for the moment, the bulls at least have something to argue about in terms of valuations. That's the important thing. Dow's off the lows, down 115 points. David, back to you.
Okay, thank you, Bob. Bob Pisani on the floor for us. Of course, we're staying on top of another volatile session right here on Wall Street. And as we head to break, take a look at the movement in treasuries. It is key.